Okay, Dabur has also come out with its earnings, so let's pull up that stock for you. Revenues at 1865 crore rupees. Now, we were working with a far higher number. If this is on a consolidated basis, then it's a huge miss because we were working with a number of 2235 crore rupees. Remember, largely on account of the fact that, two-thirds of Dabur's portfolio belong to essential items, we were expecting a very limited impact on the account of the lockdown. 281 crore rupee PAT performance, and that is well below what the street was expecting at 391 crore rupees. So I think those two headline numbers are definitely below what the street was expecting. If these are in fact the consolidated details, they're just about trickling out on your screens. Now do remember that the domestic volume growth as well was expected to be in single digits at around 3%. So that is what the street as well would be looking out for. But by and large, for a company like Dabur, the healthcare category, the food category, that was likely to aid the overall volume rate, which is why we were also going in with conservative but not very poor estimates when it comes to the numbers. And this has been a big disappointment because it's been a miss on the revenue front and a miss on the PAT. Margins were expected to be absolutely flat at 21.4%. So we'll have to wait and watch what we get. 352 crore rupee EBITDA performance, and that as well does not match up to the street expectations. We were working with a number of 480 crore rupees. So I think it's safe to say that on all parameters, it's been a miss for Dabur in this quarter. What the street will very closely be eyeing now from the management is the outlook on their volume growth as well as their rural growth. Take it across to Vinny then, who's breaking down the numbers for us. And Vinny, it's been a miss across the board.
Absolutely, Awan, we were expecting a higher number in terms of revenue as well as EBITDA and margins. Now, margins have only come at 19%, and maybe I think this is due to the input costs also, which have impacted the margins. Also, let's not forget Dabur, the portfolio is more than two-thirds of the portfolio is essential items. Despite that, Dabur has not done well. The revenues are also down this time, and revenues stand at only 1,865 crores versus 2,182 crores. So a big miss on the front of the revenue, the revenue as well. Even the PATs are a big miss. And we'll have to look at the volume growth number also. That this is also going to be weak is what we're expecting. And we'll have to wait for further numbers to come out, and I'll update as soon as we come out with more numbers.
Okay, Rajat, let's get a view from you on the numbers that have come in on Dabur. Could this be possibly the impact of challenges on the supply side, genuinely demand, regardless of the fact that a large chunk of their portfolio is essentials? Because the numbers are definitely below estimates.
Yeah, no, two things there. First of all, I was looking at Sun Pharma numbers, and that's a stock that I've recommended on your show, and I keep holding that in many portfolios. So I think the reason why the bottom line looks way below estimate is because there's a one-time settlement with Adotax, which they've disclosed in the notes. This is just one time to settle an outstanding lawsuit, and then there is higher employee cost benefit. So those are the two things which are making the expenses look higher, the exceptional item and higher expenses. Otherwise, the top line is actually higher than estimates if you see it at the consolidated level. And this was the last of the disputes that was pending that they've now settled. So I don't think the numbers are as bad as optically they appear. On Dabur, yes, the numbers do look bad, genuinely bad. Again, I'm looking at them right now. I think this may well be a genuine case. So because, from January to March, there was nothing lockdown-wise which would impact their supply chains or, have any impact on their sales. You'll have to deep dive into these numbers because this may go beyond the financials that you're looking at. And again, all the products that they manufacture, the demand for any of these should not be impacted that much by a lockdown, which was anyways 8 to 10 days. So yeah, these numbers may be, what do you say, genuinely bad numbers. And you'll have to see why.
All right.